please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar. The market is up 127, 130 odd points, and it's been super strong since, the word go. No let up really. Look at the Bank Nifty, the Midcap Index, the Small Cap Index. Follow-through buying came on in early, and it's not abated since, even as we approach over the last 2 odd hours of trade. In terms of top gainers, just without going into stocks, sectoral gainers, real estate tops the list. It's followed by the metal index. The index itself is up 2%. You got the private bank index and the energy index, which are up about 1.5%. So it's real estate, metals, energy, and private banks with at least a 1.5% gains, if not more. So that's where bulk of the activity is, even in terms of nifty stocks. We'll touch upon some of those in a bit, but let's start with the headlines. My colleague Anisha is with me here today. Anisha, afternoon.
Hi Prashant, yes, as you mentioned, let's start this show with the top headlines then. The market powers on, cheering the policy's neutral tone and RBI's confidence on growth. Market breadth firmly in favour of advancing stocks.
Mid-cap and small caps extend yesterday's rally. Both indices gain over 250 points in trade today.
10-year bond yields hit 7.96% mark, a near 2.5-year high. Experts say 8% could well be on the horizon. NBFC stocks quiet today.
3 crore shares or 6% equity of future retail has changed hands at about 560 rupees a share. Speaking with CNBC TV 18, Kishore Bayani confirms that the company will get about 575 crores via a clawback clause, which was part of the deal.
Mumbaikars must be ready to spend the weekend indoors as the Weather Bureau has issued an extremely heavy rainfall alert and warns that the heavy showers are likely to continue till Monday.
All right, that's essentially the row of top stories. We'll spend some time talking about a few of these in just a bit. Metal stocks are doing pretty well. Tata Steel is at the bottom of the screen. You could look at JSPL, even JSW Steel. All of these are doing very well. Vedanta, actually the entire metal complex, non-ferrous stocks as well, are doing very well. Ashwani is with us as always on the top of the show. Ashwani, thanks very much. Afternoon. Your sense whether this can extend, how much, and how could you trade the indices, at least for now?
See, we are getting a small dip as we speak on Bank Nifty as well as Nifty. So my sense is this can be bought and possibly you will see another resumption of the rally and closing at the highs because today is only, second day of a pullback, and my sense is that you have more pullback here because mid caps need to recover. There are a lot of short positions going into the policy, so that will see recovery. So overall, still people should be long. I think a couple of more days shouldn't be unexpected. We'll underperform the global markets, but for the moment there are enough short positions to take us higher. Having said that, Godrej Property is a buy with a stop of 760, target of 785. HDFC Bank is a buy with a stop of 2065, target of 2100. And Shriram Transport is a buy with a stop of 1450, target of 1510.
These metal names, you think we could start to see another meaningful leg higher? Steel especially, Ashwani.
See, given that global markets risk on is there, so this is a global sector, so and also one that is corrected quite a lot. So my sense is everything that's globally dominating that should do well because chances are other markets do well. We will have our own issues, inflation, this, that, but globally oriented sectors should hold up and possibly move higher from here.
Okay, Ashwani, thank you so much for joining us with that perspective. But moving on to a CNBC TV 18 exclusive then, we understand that Attorney General's opinion has been sought for sugar cess. Sapna Das, who's joining us with these details, is joining in now. Sapna, over to you.
Yeah, hi. So just taking this issue forward, there has been a lot of to and fro deliberation, discussion, on this matter. The last GOM and the sugar cess met in Bombay on June 3rd. So what we are now given to understand is that the Attorney General's opinion has also been sought on this matter because the centre as well as the states want to be, absolutely clear whether this kind of an arrangement can be done under GST in principle. So what we are given to understand was that since there was a, clean energy cess issue that was ongoing, and that has not been subsumed into the compensation cess, that matter was at High Court, so High Court given interim relief to the petitioner, but now we understand the AG has moved a special leave petition in Supreme Court on this matter. So unless the AG's opinion comes in, the sugar cess issue, is not going to go forward, at least in terms of the applicability of the cess, if at all. So that's one stumbling block that we see right now. So as an alternative, various options that have been under discussion, some of them have come up earlier, for example, to create a separate, a farmer welfare fund. And for that, you can have a separate 1% tax on other items, not necessarily to the cess. But the broad question that has been raised now is that probably, the entire thing should not be limited to one commodity like sugar. They might like to consider other agriculture commodities also. Otherwise, the road is open for, the demands to keep coming in. That's one. Second, very quickly, also some deliberations have happened in terms of whether the rate, the GST rate on sugar itself can be increased from 5% to 12%. Now, if you do that, we understand that the centre may gain only 2,000 crores annually. So how much will that benefit? A question mark on that. Last but not the least, the sugar package that has just been cleared by the Union Cabinet, we are given to understand, to an extent, this will help alleviate farmer distress. To that extent, possibly, if you look at the area calculation, if you include the SAP of the states, area calculations come to around 20 to 1,000 crores, which obviously, will be insufficient to the certain mechanism that we're looking at right now. But if you calculate at the FRP, it's around 13,000 crores. So there are various, points of view that are coming in that possibly cess may not be required. You can look at some other way of doing it. So now we are also given to understand that this matter is going to go to the Union Finance Minister, and after that, the clarity is likely to emerge.
Okay, Sapna, it's an important matter and which will have implications for not just sugar, but other GST commodities, etc. as well. The big question is cess the desirable route, or which many clearly agree, tax experts clearly agree is not. You start putting cess on one and then the impulse is to do that for other commodities as well. The better thing to do is to change the GST rates itself. Sapna said that is, the latter, which is changing GST rates higher and not putting a cess, is also an option which may be considered. We'll track that story and get you more as there are more developments, but let's get some market opinion now. We spoke with Harsha Upadhyay of Kotak Mutual Fund on the road ahead for the Indian market and of course what he likes right now. Listen in and we're right back.
I think the mid and small caps have fallen much more than large caps since the beginning of this year. But it was also the space which was relatively expensively valued compared to large caps. So to that extent, this valuation adjustment was anyways on the cards. After the recent fall, yes, maybe one leg of correction in the mid caps is over, but we can't for sure say that it has bottomed out. We remain cautious on the mid cap segment. Yes, over the next few weeks, few months, maybe we'll get some more ideas in the mid cap segment. As long as market is going to remain volatile, I think there will be some money which will go into defensive sectors. And one of the defensive sectors is IT clearly. Wherein the management commentary has improved a little bit in the last few months. We continue to remain bullish on the private sector retail-focused banks and some of the insurance companies.
Well, as far as Nifty is concerned, we are sitting comfortably above that 10,800 mark. The bank Nifty has slipped a tad bit off the highs, and that is because stocks like Kotak Mahindra Bank, IndusInd Bank, ICICI Bank have seen a bit of slip when it comes from the high point of the day. Midcaps continue to given their strong performance because that index is up around 1.4%, with the advanced decline ratio being 4:1. But talking about stock-specific action then, Action Construction is in focus today as the stock has been added in BSE's ASM list. Saurabh Agarwal, the ED of the company, joins us on the phone line to discuss more. Mr. Saurabh, thank you so much for joining us. Good afternoon. So first up, have you received any such communication from BSE regarding getting included in the ASM list? Have they mentioned any grounds or the timeline regarding this matter?
Yeah, good afternoon. See, we have really received no confirmation or letter, anything officially. But yes, around there is news and we saw a random letter which was also sent to us. From one of those WhatsApp groups and things that we have been put into ASM, and after following money control, we really got to know.
Okay.
So we don't have the official information of what could be the reason and for how long it's going to stay.
Okay, additionally, Mr. Agarwal, there have been some recent open market transactions wherein the promoters have increased the stake as well. What is your targeted promoter stake, and is there any more action that is expected in the near term?
You see, about a couple of days back, we realized that the stock was available at really good valuation.
Okay.
And that's when we got induced to buy a little. So, generally we are buyers in our stock if we get it at good valuation. So that was the motive behind it, and I'm sure as and when we get more opportunity, we'll do that.
Okay,
as per the regulations, obviously.
Okay, so what is your current stake right now, and what can you take it to? How much more can you buy from the markets?
See, we are about 69%
Okay.
of now, and as per the earlier creeping and whatever, it can be increased by about 5% in a year. So, I mean, obviously that option is always open as and when, we see an opportune time. Yes.
Mr. Agarwal, how's business been doing? I mean, in various segments. Could you just run us through what the quarter so far has been like?
See, the business has been doing very well, and we have started performing reasonably well in all our segments. We were doing pretty well in cranes and metal handling, and we were able to grow it pretty fast in the last year. And the same pattern seems to be evolving. Our order book inflow is good, and our delivery execution is also improving. Apart from that, our slightly weaker segments like the construction equipment or the agri equipment, that is also gaining momentum, because I think in the recent past we've done all the right things to drive these businesses further. And I'm very sure even in construction equipment and agri, apart from the growth that we will see in this year, maybe construction equipment would be about 70-80% top line growth is what we are looking at. Agri, we are looking at about a 25-30% growth, and then we are looking at our EBIT levels, margins up to, rationalizing the company's things. They have been a little lower in the past.
Right. So full FY19. What's the top line growth that you think you could hit? I mean, conservatively.
Conservatively, doing a 30-35% looks evident. We are already seeing it. We are going after that, I feel. And that only time will tell how the second half will unfold, because generally what happens is second half is about 60% of our revenue and, much better profitability because of, high revenue coming in. So I'm sure we are already in doing a 30-35% on the top line, taking our EBITDA margins to about 10-11%. Should be easy. Everything looks moving in the right direction as of now.
And the last two quarters are the seasonally, strong quarters, Mr. Agarwal, is it?
Yes. In the first half, we do about 40-45% of our revenue. And in the second half, that is the December quarter and the March quarter, we do about % of our business. And that's when, the festive season kicks in and a lot of things happen, and the rains have finished. So the construction activity also starts to pick up faster.
So, Mr. Agarwal, you mentioned the target of 30-35% growth on the top line, but what about margins? Because you were earlier telling us that because of the commodity prices, the margins were taking a bit of hit. Is that expected to abate going forward?
Yes, definitely. What has happened in the last 6 months, we could have delivered much better margins than what we did in Q4 especially. But because of the steel, which is one of our main things, the margins were a little subdued. The entire benefit of the operating leverage did not play out.
Okay.
Going forward, I feel it will play out, and we should rather be able to improve our margins because we have already pushed in some price increases owing to steel, and we are going to do it further. But yes, being conservative again, doing a 10-11% EBITDA looks very easy. Yeah, things start to look better in the next 1 or 2 months with respect to our price increase which we're putting in the market. Yes, we should be looking at even better margins.
Okay, and Mr. Agarwal, talking about the balance sheet, the trade payables had shot up in the quarter gone by. Is that something that is also expected to come down going forward, and what can be your debt levels going forward?
See, our intention as of now, because about 7-8 years back, we used to be a totally debt-free company. We hardly used to use even any short-term funds. And currently, I think at the end of last quarter, we were close to about 70-80 crores. I don't remember the exact figure in terms of our borrowing. And our intention is that as soon as possible, and most probably within this year, we would be looking at wiping this out, because when the company is generating money, I don't think we need to carry on any short-term or long-term debt, and that's our intention.
Mr. Agarwal, thank you very much. Appreciate you joining in with that outlook for the company. Appreciate it. Well, we are going to take a very quick break here with news that there is no real let-up. I mean, actually, stocks are bouncing like UPL at the bottom of the screen. It's come off the lows of the day. So when we come back, we'll get you some more, couple of exclusive stories that we're going to try and focus on. Of course, a quick check on the markets as well. Back in 2 minutes. Okay, so the market still up about 113 odd points or so. Things still looking pretty steady, although off the highs. As I said, we're going to focus on some exclusive information, exclusive story. GMR is working on clearing the decks for its airports business IPO. It's essentially negotiating for an out-of-court settlement with investors that it essentially fell out with. The case is essentially being heard at the Singapore Arbitration Tribunal. Nisha is here with more exclusive details. Nisha.
Prashant, this is an important development because what it can essentially do is clear the decks for the multi-billion-dollar expected GMR Airports IPO, which is on the anvil. Now, remember that the three investors, that is Macquarie Group as well as JM Financial and Stanchart, had invested in the company and they had convertible shares. So, therefore, they wanted to exercise the put option. That's where they had a dispute. Now, sources with direct knowledge share with us that both the parties are now on the discussion table for an out-of-court settlement of this long-standing dispute. What is being talked about is a little over 4,000 odd crore rupees in terms of settlement, and which will be a mix of 1/3 of equity in GMR Airports company, 1/3 in terms of debt, and 1/3 coming in by way of cash. That is the contour of settlement that the two parties are discussing at this point, is what we gather from sources with direct knowledge. So that's going on. Now, remember, time is too short between the two parties because all the developments at the Singapore Arbitration Court, where this matter is being heard, all the hearings are over and only the final order is awaited, which is expected in July. So they are really looking at coming to some sort of a conclusion and settling it out of court amicably ahead of that, and therefore also proceed with the airport's IPO as well.
Okay, Nisha, thank you so much for that. But let's move on and get in some important market opinion coming in from Sanjay Shah of Morgan Stanley on what he makes of the RBI rate hike and his outlook for the market going forward.
The Reserve Bank of India hiking rates, obviously it's against the background of corporate performance improving and the economy definitely showing some signs of a pickup. So I think it's fair to say that after the strong run that we have had in the last few years, and obviously accelerated by the fact that the domestic flows have been strong, so also the overseas flows till at least the beginning of this year. With that as a background, I think we are going through a phase in the market where we need to consolidate and just wait out some time. So the longer term story for India remains really strong, but the near and now appears one should be a little bit cautious about it. The last 4 years, we've seen almost $75 billion of overseas money coming into India between equity and debt. Year to date, we've seen slightly over $4.5 billion of outflow. Year to date in emerging markets, equities have seen about $52 billion of inflows, but India has really not got much. So fair to say, and in some ways justifiably so, that the relative attraction of India as compared to other emerging markets in the short term has waned a little bit. Again, it doesn't take anything away from the long-term story because there's been fabulous work done by the government and the economic growth is just picking up. But yes, there is some short-term, rather a period in which India has to go through some kind of a consolidation, and that's why we're not seeing more inflows come through.
Okay, so we're going to wrap up this edition of Midcap Radar with about 110, 111 points on the Nifty. That's it from all of us here. Thanks very much for staying with us. Your stocks will take the action forward.